stock market of today is extremely volatile. From bulls to bears, your money is surrounded by hazards over which you have no control. The last thing you need is another risk to your investment dollar. There are people out there who will stop at nothing to take your hard-earned money. These people could be your friends, pillars of the community, or just casual business or social acquaintances. Making the wrong decision with your money can spell disaster. Oklahoma's InvestEd programs are here to help you make the right decision and protect the money you have worked so hard to save. I'm your host, Rex Linn. Welcome to this InvestEd Investor Protection Education Program presented by the Oklahoma Securities Commission. During this presentation, you will learn about the Oklahoma Securities Commission, the common types of investment scams, how to protect yourself, and what to do if you suspect fraudulent activity. Education is protection. It is our goal to help you protect your wealth through fraud prevention knowledge. Irving?
Thank you, Rex. All investing involves unavoidable risks. Individual investors do not have control over most of these risks. You can, however, take steps to protect yourself and your family from the risk of loss from securities fraud. You may encounter securities fraud or investment fraud in a number of ways: in newspaper, TV, or radio advertisements, emails, the internet, traditional mail, the telephone, and referrals from friends and family members. Typically, you can become a victim because the con artist gains your trust. Investigate before you invest, no matter how well you know the person offering an investment opportunity.
The Bernard Madoff scandal of 2008 brought to light the many dangers your investment dollar can encounter. Similar frauds have occurred and will continue to occur in Oklahoma. In 2004, a father and son team swindled millions from Oklahomans in an elaborate Ponzi scheme involving fake low-risk, high-return investment contracts. Another stockbroker promised folks in northwestern Oklahoma huge returns from a Ponzi involving a private options trading fund, also labeled as a hedge fund. The Ponzi is a very common type of investment fraud, named after Charles Ponzi, who swindled millions in the 1920s through the fraudulent trading of international reply coupons, or IRCs, for postage stamps. Bernard Madoff made billions on what may be the largest and most highly profiled Ponzi scheme today. A Ponzi is any scam where an investor's money is used to pay off previous investors. Often the funds are not invested at all. Many security frauds involve a Ponzi. Irving will describe how a Ponzi works.
The Ponzi works like this. A person asks you to invest in some business venture, usually promising high yield. However, the money they collect is used only to pay off phony profits to earlier participants. Some of those participants, smelling a sure thing, often reinvest only to see their money lost the second time around. Many scams you encounter involve an affinity fraud. Madoff's affinity appeal was to a wealthy country club set, a religious group, and other investment managers fooled by the con. The affinity in the Oklahoma cases involved members of a tight-knit local suburban community. Community members thought the con artist shared a similar community value of honesty. Affinity fraud targets religious, ethnic, cultural, and professional groups. The con artist may be a member of the group or pretend to be a member of the group in order to gain the group's trust. Con artists often recruit a respected member of the group to promote their schemes. In many cases, even these leaders become victims.
Ponzi schemes, where money collected is pocketed rather than invested, usually involve some affinity group. The group typically has at least one thing in common, like ethnicity, church, religion, or professional or social organization. The con artist may pose as a member of the group, enlist the help of your group's leaders to win your trust, and get you excited about a supposedly safe investment. Remember to investigate before you invest, even if the seller is your closest friend or a trusted relative.
Most investment seminars, or what we like to call free lunch scams, target seniors, promoters of unsuitable investments or investments that have either a risk level higher than the investor can afford or do not fit the investor's goals at all. These promoters are seeking potential investors. The sales seminars are typically disguised as educational meetings. Many promise a free meal to lure the unsuspecting investor. The securities offered are usually high risk with little to no returns on the investment.
Remember, there's no such thing as a free lunch. As Irving just pointed out, many of these promotions promise a free meal along with higher returns and little or no risk. In reality, you could end up with high risk and no returns.
Impressive sounding titles can serve as an easy way for the dishonest sales agent or advisor to gain a senior's trust and run what is known as the Senior Investment Specialist scam. In this scam, con artists will frequently style themselves as senior specialists who might help seniors prepare a living will or trust, or help them fill out forms for prescription drug benefits, and who are not qualified to provide investment advice. The fraudster uses this tactic as a way to get personal information, a laundry list of your personal assets. Senior specialist investment scams are often used in conjunction with free lunch seminars and other sales promotions.
Remember, there's no such thing as a free lunch. Check it out.
The internet can be a con artist's dream. Con artists continue to take advantage of technology to lure investors into what is known as a pump and dump stock scheme, or scams where an investor or group of investors promote a stock causing the price to go up, then sell their previously acquired cheap stock once the stock price has risen, making a big profit on the inflated price, leaving the innocent investor out in the cold. Con artists have the ability to make even the flimsiest deal appear as safe as putting money in the bank. Be wary of investments pitched through unsolicited emails, instant messages, and phony websites.
If you let it, the internet can mean easy access to you and your money, with no return address if the deal goes sour. Never give your information over the phone or internet until you verify the source is reputable.
In times of investment uncertainty, investors may not have confidence in traditional investments like stocks and bonds. Under these circumstances, they may fall for exotic investments touted by con artists to have low risks and high returns. Examples of these would be natural resource investment, such as oil and gas, solar, or wind energy, gold and silver. Commodities futures like precious metals and currency trading. Fluctuating oil and natural gas prices have made a variety of traditional and alternative energy projects attractive to investors. Most of these investments are highly risky and not appropriate for smaller investors. Investors in these down economic times are also targets of scams that involve discoveries in foreign lands of large deposits of precious metals, most often gold, either in tailings from old mines or new, previously undiscovered mines. Con artists often tout unrealistic recovery methods that will give gullible investors gold fever. Assay samples supposedly taken from the mine will usually be salted with real gold dust to falsely show the existence of a real gold deposit in the mine or in the tailings. Foreign exchange, or Forex trading, can be legitimate for governments and businesses concerned about fluctuations in international currencies. It is not appropriate for individual investors looking for safety of principal. Forex scams attract customers with sophisticated sounding offers placed in newspaper advertisements, radio promotions, or on internet sites. Until the recent decline in property values, investments in real estate have long been viewed as a sure thing, one with little downside risk and potential for substantial returns. Bad economic conditions can prove this old investment maxim to be wrong. Some real estate investments are securities, subject to full regulation under state and federal securities laws. including registration requirements and anti-fraud rules. The investor must check out even real estate investments very carefully.
Now, you may be thinking, I can never be conned like this. You need to understand all the perpetrators mentioned earlier were able to take money from lawyers, doctors, and even other stockbrokers. Bernard Madoff, for example, stole billions by convincing the nation's elite to invest in his alleged hedge funds. Celebrities, politicians, and folks who were highly regarded in the financial world suffered embarrassment and hardships by losing money in an investment that simply never existed. Nobody is immune. You should be asking yourself, how do I avoid becoming a victim of investment fraud? Irving?
Thanks, Rex. The best way I know to avoid becoming a victim of investment fraud is to understand how you could become a victim in the first place. Those who become victims of investment fraud typically are influenced by appearances. They fail to recognize and control their greed, believe they are too smart to be fooled, and often say, "It happens to others, but not to me." They have a need to please others and to be appreciated. Or they have been affected by a life-altering event, such as death of a spouse or a close family member. Here are some tips to help protect you. Use common sense. Some things really are too good to be true. Get a professional, trusted, third-party opinion when presented with investment opportunities that seem to offer unusually high returns in comparison to other investment options. Request written information that fully explains the investment, such as a prospectus or an offering circular. Documentation should contain enough clear and accurate information to allow you or your financial advisor to evaluate and verify the particulars of the investment. If you participate in an employer-sponsored retirement plan, such as a 401k, get unbiased advice and guidance before making any significant changes in your long-term savings and investment strategy. Under the pressure of a life-altering event, do not make sudden, major financial changes. Should you become a victim of a securities fraud or suspect fraudulent activity, the Oklahoma Securities Commission recommends you take the following steps before you invest. Contact the Securities Commission with any question about an investment firm, securities professional, or product. Make sure that both the seller and the investment are registered. If they are not, they may be operating illegally. After you have invested, file a complaint with the Commission. We'll tell you how to do that in just a minute. Also, you might engage the services of a qualified securities lawyer to advise you on the proper legal course of action for your particular case.
What is the Oklahoma Securities Commission? It's the first place you should go if you find yourself a victim of investment fraud. The Oklahoma Securities Commission can confirm the registration of a broker, dealer, investment advisor, or security in Oklahoma. The Commission comprises 5 members appointed by the Governor with the advice and consent of the Oklahoma State Senate. You may be wondering what the Commission can and cannot do, how fraud investigations are started, and about the Commission's investor education program, InvestEd. Irving?
Thanks, Rex. The internal operations of the Oklahoma Securities Commission are carried out by the Department of Securities. The internal administrative organization of the department includes the Division of Enforcement, Investor Education, Registration of Securities, and Registration of Securities Professionals. The Enforcement Division's primary purpose is to enforce the securities laws. Enforcement relies on the cooperation and input of the investing public. The division consists of attorneys, investigators, and financial analysts that are trained to handle the complex issues encountered in securities matters. There are approximately 200 complaints a year, all of which are investigated. and there are approximately 250 open cases during any 12-month period. The process of informing investors how to recognize, avoid, and report investment fraud and unfair sales practice in regard to the offer and sale of securities is the objective behind our investor education efforts. It is also our objective to inform the public about the services offered by the Oklahoma Securities Commission. You can find our free unbiased tools on our website at investedok.org. There are things the Oklahoma Securities Commission can and cannot do. Here's what we can do. Investigate the complaint. Take no further action if there is no evidence, if it is not within our jurisdiction, and there is no general public policy to be furthered or advanced. We can also commence administrative or civil legal action. We could also make a criminal referral. Here's what the Oklahoma Securities Commission cannot do. We cannot recommend a private attorney or arrest the wrongdoer. We cannot take an action for the primary purpose of getting an individual investor's money back. We cannot represent individuals in legal actions against wrongdoers. We cannot act on matters that are outside our jurisdiction, and usually we will not allow an individual investor to intervene in a department legal action. You may be wondering how an investigation is started at the Oklahoma Securities Commission. Here are three of the most common methods: complaints, exams of securities professionals, and referrals from governmental agencies. To file a complaint, get a complaint form from the department's website by clicking Complaint Procedures under Enforcement Division in the menu on the left side of the page. Exams of securities professionals are either for routine checks or for reasons of cause. Cause examinations address a particular problem or event identified through a variety of sources, such as customer complaints or terminations for cause of registered agents by broker-dealers, and referrals from other state and federal securities regulators. The department conducts periodic routine examinations on broker-dealers and investment advisors located in Oklahoma. Referrals from governmental agencies can come from the state attorney general, insurance, or banking departments. Referrals can also come from the Securities and Exchange Commission, the Internal Revenue Service, or other federal agencies.
If you think you or someone you know has become a victim of investment fraud, or for more information on the topics covered in this presentation, you can contact the Oklahoma Securities Commission at 405-280-7700 or through their website at securities.ok.gov. And for more investor education information, you can visit the InvestEd website at investedok.org. The InvestEd site offers a wealth of investor education resources, including the complete InvestEd TV and radio investment minute library, the InvestEd Investor Protection Kit, and information about InvestEd STARS, Students Tracking and Researching the Stock Market. STARS is a stock market portfolio program designed for grades 9 through 12. This concludes our program. Remember to visit the InvestEd website or contact the Oklahoma Securities Commission for more information or questions. Thank you.
Thanks, Rex. We hope this presentation has been informative and helpful. Education is protection. InvestEd is the voice of investor protection in Oklahoma. Thank you for watching. Well, Frank, looks like he made off with their money.
You mean Bernard?